You probably heard of a lot of rumbling about the Feds possibly announcing rate changes later this week. There's a lot of myths out there about what this means. So we're breaking it down easily for you so you can understand. Here's the important thing for you to know. An increase in the federal rates does not necessarily mean an increase in mortgage rates. Here's the backstory. When the media talks about federal rates, they're referring to something called the federal funds target rate. The federal funds target rate is not related to consumers or home buyers. Instead, it regulates banks themselves. The Federal Reserve has requirements for how much money banks need to have on hand in their own reserves. When a bank drops below that limit, oftentimes they borrow money from other banks who have extra cash on hand. They borrow the money at a rate which is negotiated between these banks themselves. The target interest rate is a guideline on that interest rate and what that interest rate should be between the banks. So when they say the Feds are going to increase rates, they are actually increasing the interest rates for banks to borrow from other banks. So to be clear, the Feds are not increasing rates on mortgages. If you have any questions about this or are wondering if this affects you and how it affects you, please reach out to us. We'd be happy to talk to you about it and talk about your situation. I'm Chris Galley with Novus Home Mortgage, and thanks for tuning in.